Welcome to Tracking IPDA. We had a short action packed NFP week, and I have to say, it was another incredible week of watching IPDA and learning more about myself and the model. I learned that when my model fails, it's telling me something about IPDA and where she wants to go to next. I actually discovered the re-entry setup that occurs after my setup fails. I went back through my journal looking at all my failed setups, meaning the ones that lost, and I saw similar characteristics on how I could have re-entered after the trade failed. Guys, if you're not journaling as a trader, you're setting yourself up to fail, man. I've been journaling for it's been over 2 years now since I started journaling, and it's immensely improved my trading. I'm able to go back into the trades I've taken and see why they lost, and been able to see similar characteristics in price action as to why certain setup fail and what happens after it fails. It's just journal, guys. Believe me, I didn't believe it at first. Trust me, when I first got into trading, I was like, ugh, I don't need to journal. I didn't journal for the first 3 years of when I was learning how to trade. I didn't journal. When I started journaling after a year, difference. Okay, guys, nothing beats experience, and if you're losing in trading right now, it's only because of time and experience. These are things that you have control over, so please don't give up hope, okay? I finished the week with a 7.2% increase in equity. Dollar signs were talking, as you can see on the screen, $1,805. And overall, we're up on the account by 33.5%, which is $8,375. Let's get to hunting, guys. Grab your tools. As always, we'll be looking at the charts in bar replay mode. This means you won't be able to see my executions. However, you will be able to see my horizontal line, which represent the time aspect of trading. The most important tool you need to track down IPDA's movement, time. Now remember, even though I'm going to show you both buy and sell setups, it's important to know that your high probability trades will be in the direction of your weekly program. You can take counter trend trades with this model. For example, you can take sell setups even if your high time frame direction is bullish, and vice versa. It's just your probability of winning reduces significantly when you go against the high time frame directional bias. If you're new to trading, I do suggest only taking trades in your weekly bias, okay? Just to avoid taking counter trend trades and losing and thinking that the model isn't working and then you're switching strategies, okay? It's not the model, it's you. We're going into this hunt with the understanding that you guys have already arrived at your high time frame directional bias. This is a hunt purely for setups. To the hunt. Let's go. Monday, July 1st, trade of the day breakdown. We had the AM session buy formation. Let's break it down. As always, we start with the economic calendar, and as you can see, we had high and medium impact news come out at 9:45 and 10. Opening range 9:30 to 10 o'clock. We're not trading. We're looking to see what price is doing. As you can see, post 10:10 is when we're looking for the signal to enter the market. Post 10 o'clock, we had price trade below a kilo. Displacement higher, causing a market structure shift. The displacement leg has a fair value gap busy near the swing low. We have multiple busies, okay? We wait for a swing high to form to anticipate execution. And for execution, we're looking to enter on a fair value gap created in a displacement leg that took structure near the equilibrium of the range. We had the high from the highest point in this region right here is here. We had the high form right here. The first discount array below 50% was the high of this BISI right here. So you would have been tagged in this trade at 10:54, breaking even at 12:39, getting out that trade at 2:15 for a total time of 3 hours 21 minutes in this trade. Drawdown on this trade was 18 ticks for a 6% bagged and tagged. Let's look at factors that made this trade a high probability setup. First, we had the time aspect, is AM session. The range, we're in the middle to lower quadrant, we're in discount for a buy. Liquidity, we have a short-term low right here created before the high of the BISI. When price took that liquidity, as you can see, we saw immediate reaction to the upside, letting you know that you were on side, okay? So 3 out of 3, making this a high probability trade that netted you 6%. This was, in fact, the trade that got me my 7.2% for the week, and I was done trading on this particular account. As you can see, July 1st, I was done trading on this account after this trade, okay? The following setups that come, you could have took them as well, don't worry, but on a separate account, okay? This is just one trade, one model account, okay? We're not expecting the model to do anything more than it does, okay? Monday, July 1st, we also had a lunch session, sell formation, a counter trend trade. Let's break it down. As always, we start with the news. We already had the news come out in the morning. Lunch session start. We had price trade above London session high. We take liquidity above that London session high, which is a key high. Displacement lower, causing a market structure shift. The displacement leg has a fair value gap SIBI near the swing high. We wait for a swing low to form to anticipate execution. For execution, we're looking to enter on a fair value gap created in the displacement leg near the equilibrium of the range. The first premium array that's above the 50%, we have the high of the SIBI right here. So you would have been tagged in this trade at 101, breaking even at 105, taking out the trade at 123 for a total time of 22 minutes in this trade. Drawdown in this trade was 20 ticks for a 6% bagged and tagged. Let's look at factors that made this trade a high probability to set up. First, we had the time aspect is a lunch session. Range, we're in the middle to upper quadrant, we're in the premium for a sell. Liquidity, we do have a short-term high right here created in front of the, not the high, but in front of the consequent encouragement of the SIBI. So it does come and take that liquidity. And once it takes the liquidity, as you can see, immediate reaction, letting you know you're on side, okay? So 3 out of 3, making this a high probability to set up that netted you 6%. Tuesday, July 2nd, trade of the day breakdown. We had the AM session sell formation, a counter trend trade that failed. Let's break it down. As always, we start with the economic news, and as you can see, we had high impact news come out at 9:30 and 10 o'clock. Post 10 o'clock is when we're looking for a signal to enter the market. As you can see, we had price trade above a key high. We had liquidity taken above a key high. Displacement lower, causing a market structure shift. The displacement leg has a fair value gap SIBI near the swing high. We wait for a swing low to form to anticipate execution. For execution, we're looking to enter on the fair value gap created in the displacement leg that took structure near the equilibrium of the range. And the first premium array that we have above 50% is the high of the SIBI. So you would have been tagged in this trade on this candle at 10:14. You don't get to break even. You're taking out the trade at 10:35 for a total time of 21 minutes in this trade. Drawdown in this trade was 123 tick for a 2% loss. Okay, it was a counter trend trade that failed. Even though we took a loss, let's look at factors that made this trade a high probability to set up. First, we had the time aspect is the AM session and is post 10:10. Checked the range. We're in the middle to upper quadrant. We're in the premium for a sell. Check. No liquidity in this setup, but we do have 2 out of the 3 matching to make this a high probability setup. And even though you took a loss, like I said, that's the only thing promised to traders. This was in fact the trade that actually got me to realize where I can get in once the setup fails. Okay, so I learned a lot from my losses, which is what you're supposed to do as a trader. I went back and looked at all the TOTDs that failed, and I realized similar characteristics in the majority. It wasn't all of them, but the majority of them enough to tell me that, hey, once the setup fails, look for this, look for that, and you can get back in on the trend. Wednesday, July 3rd, trade of the day breakdown, and we had a half day. Market was closed after the lunch session, so we did have a morning session buy formation that formed. Let's break it down. As always, we start with the economic calendar, and as you can see, we had medium and high impact news come out in the morning. 9:30 to 10 o'clock opening range. We're not really trading. We're looking to see what price is doing. And before 9:30, actually, we had the setup form. We trade below a kilo. Displacement higher, causing a market structure shift. When the model forms prior to the opening range or during the opening range, post 10 o'clock, we're waiting to see if we get price to drop back down into the fair value gap that was created in the displacement leg below 0.25. And as you can see, post 10 o'clock, we had price drop down. The discount array below 0.25 was right here. We had it looks small. We had a BISI right here. It looks small, but it's there. I can zoom in a little bit so you guys can see that. Yes, we have a BISI right here. And as you can see, post 10 o'clock, price comes into it. So you would have been tagged in this trade at 10:26, breaking even at 11:16, taking out that trade at 11:51 for a total time of 1 hour, 25 minutes in this trade. Drawdown in this trade was 6 ticks for a 6% bagged and tagged. Let's look at factors that made this trade a high probability to set up. First, we had a time aspect is the AM session check. The range, we're in the middle to lower quadrant, we're in a discount for a buy check. Liquidity, we have a short-term low formed right here. We also had this short-term low, right? Oh, no, actually that one actually comes into here. So we had this short-term low that price comes and takes into the BISI, and as soon as you take that liquidity, you saw immediate reaction to the upside, okay, letting you know once again that you're on side. So 3 out of 3, making this a high probability to set up on this NFP week, netting you 6%, okay. This week was very short and action packed. I only traded on Monday and I was done. One thing I'm still struggling with, by the way, is my exits. I'm still finding it difficult when price reaches the close to my TP, just keeping my hands to myself and letting the price hit the TP. Once it gets close and it starts retracing on me a little bit, I get antsy and then I end up closing the trade, which is what I did on Monday. I ended up closing the trade prematurely. If you guys have any tips on what I can do with my exits, I guess I could just walk away from the charts once I'm in a trade and just either let it take me out once set an alarm for break even. Once I hit break even, walk away from the charts, go do something else, and I guess it can either take me out or I'll hit TP, right? But I'm gonna try that this week coming to see how it goes. I'll keep you guys posted. But yeah, thank you guys for watching Tracking IPDA. I'll see you all next week. Hopefully you guys learned something and you enjoyed this. If you have any questions, post in the comments below. If there's something about the model that you don't get, you know, I'm here to help you guys. I'm on a mission to impact 1 million people through trading by 2030. I mean that. That's my purpose right now. And if you guys have any questions, post in the comments below and I'll be or reach out and I'm more than happy to help you guys out. Okay, there's more than enough money for all of us to eat and come back for seconds, thirds, take some home for for the folks at home and just pack it to go play. Okay, I'm not selfish. You making money in the markets doesn't take away from the fact that I'm making money in the markets. Okay, we can all make money. I want to build a community of billion-dollar traders, so let's make it happen, guys. All right, thank you guys for tuning in every week.